been honored to be on the Midas List, not once, not twice, not 3 times, but 17 times.
AI to me is democratization of intelligence. According to NVCA, 67% of all dollars went into AI companies. So my advice to entrepreneurs is, right, you better adopt this technology and do something with it. When there are $1 billion seed rounds, my head spins and I can't make head or tail sense of it. Companies come and they say, oh, I'm depressed. I said, what happened? Oh, my valuation is only 300 million at the seed. And I go like, the spend on knowledge workers globally is 30 trillion. And AI will do 10 to 20% of that. It's a $3 to $6 trillion opportunity over the next 5 to 7 years. The companies won't go 0 to 100 in the first year. If they go 1 to 10, they're doing pretty well. If you only go 1 to 3, maybe you're like median, average. For the first time in our lives, machines understand our language. So we don't need to learn programming.
Are you vibe coding?
I am actually in a few ways. To me, knowledge, expertise is going to get democratized. So my advice to every human, including myself, is consume this thing before it consumes you.
Navin, welcome to Sourcery.
Thank you for having me.
Thank you for having me.
No, it's great. We've been talking for a while. I'm glad we're doing this together.
I know this is so fun. And this is on the day of the divot list.
That's true.
The Mayfield divot list.
Divot list. Yeah.
We have a lot to cover today. But to start, we have to address something.
Let's do that.
You have been involved in some of the most, if not all of the most consequential shifts in technology. And you've been honored to be on the Midas List, not once, not twice, not 3 times, but 17 times.
Yeah, just been lucky working with amazing people.
What does it take to build a winning company?
I think Mayfield and my perspective always is, it always starts and ends with people. So we try to bet on the right people who are visionaries, very mission-oriented, can go through any wall, are team players and have high EQ. A lot of people have IQ, but they really have high EQ and are secure in their skin and will want to win the right way along with their team at any cost. So it's always about the people. Starts there, ends there. So as long as you pick the right people, it doesn't matter what their initial starting point is, they'll go win at the end. And I'm an optimist. Pick great people, great things happen.
And what does that mean for the AI industry today, for early stage companies?
Yeah, I think it still remains the same, right? Old is gold. At the end, venture entrepreneurship is an apprenticeship-based business. And in the AI era, overall, it's a 100x opportunity. I've been lucky to be involved in the web era, the mobile, the cloud, the social, the not so good eras. And then the AI, I think those eras were a 10x opportunity. This is a 100x opportunity. So the kind of success that'll get created won't be just $10 billion companies. There'll be many $100 billion companies. But again, what will matter the most is the people who are creating these companies. That's not going to change, at least for Mayfield and me, at the stage we invest, which is inception and ideation stage primarily.
What makes this 100 times opportunity?
Yeah. So what I would say is, if I look at the PC era, it was creating an environment where it was a 10x disruption where you brought computing to every desktop. You move it to the web, now we could consume information. You move to the cloud, it was a back-end innovation. Mobile, a front-end innovation. With AI, the reason it is 100x, there are 2 things which are happening. First, the interface in the way we interact with machines is becoming conversational. For the first time in our lives, not only mine, but everybody's, including my parents, machines understand our language. So we don't need to learn programming. So it's an expansion, which is we can talk to machines and ask them to do things in our natural language. The second thing is with the cost of compute and the innovation in AI technology, GPUs, machines can now think, they can reason, they can plan, but what's difference is they can take action. And that's another 10x force. So if you combine the disruption on the front end, where machines understand human language, and you multiply that with what's possible on the back end, with intelligence getting democratized, it's a 100x force. And as an example, there are 30 million developers in the world today who know how to program. Using AI, I think everybody, 8 billion people in the world will be programmers because they'll vibe code. That's why this is a 100x opportunity. It's really a 100x because 100x times 30 million is 3 billion. So there will be 3 billion creators in this world. And it's a very exciting time, right? Very, very exciting time.
Are you vibe coding?
I am actually not in a few ways. One, trying to use vibe code with prompts, my daily work. And second, in the free time, if you're a VC, you have to eat your own dog food. So I'm creating fun apps, fun websites. And I started as a developer back in the mid 90s where I created my first company. So it's good. Now I had forgotten everything. Now I can remember everything. You have to, right? Like you have to eat your own dog food to understand what's happening. And it's fun. It's fun.
It's called a vibe for a reason.
Yeah, we're in the vibe era. Like I called it the vibe economy. Not only will be vibe coding, it'll be vibe ops. It's really the vibe era. It's not the AI era. It's the vibe era.
Rebrand.
Rebrand. That's what VCs and marketeers do well.
Some people call it also the AI supercycle.
Mm-hmm.
Where do you think we are in the evolution of this supercycle?
Yeah, I would say we're still early on in the super cycle, but the valuations are really high in some of the spaces. And this is the standard hype curve. When new waves come, expectations are ahead of reality. But if I go out 4, 5, 10 years out, it'll be a reality. The same thing happened with the internet, where things just astronomically were overvalued in 3, 4 years. But the difference today is the reason it's going to be 100x bigger, because when the internet happened, people didn't have connectivity. Today, 7 billion, 8 billion people are on the internet using mobile or their PCs. So you can have things grow to 100 million monthly active users in 1 month, in 2 months, in 3 months. It took 10 years for Amazon to get to that point. Versus when TikTok happened, people were talking about, hey, 9 months, 6 months to get that. Now people talk about like a week to get there. So I think the reality is it's early days, but some of the things have already taken off, whether it was with ChatGPT, but let's look at vibe coding. Companies are doing 100 million in revenue, 200 million in revenues. They're going to be doing 10 billion in revenues. We'll blink and that's what they will be. But on the other side, if I look at enterprises, still early. A lot of hype, but very few enterprises can actually do anything with this technology. And there are all kinds of reports. Some reports say it's working. Every enterprise, 60% of the enterprises are using this tech. And then the MIT report comes and says 95% of it fails. So you just don't know. Is there like camps? There's the left wing, there's the right wing. We have to, but I think I'm centered in the middle. And I believe this is marathon. Company building, deployment and adoption of technology. We are maybe in round 1 right now. The best is yet to come. Besides valuations.
Besides valuations?
They're overhyped in some of the spaces. But hey, it's part of life.
At what point is it concerning to you?
It's concerning even today.
Okay.
Because I believe companies should be built with the right fundamentals and valuations should increase as they make progress. When there are $1 billion seed rounds, my head spins and it's still spinning. I can't make head or tail sense of it, right? Like how many $1 billion companies are there that have gone public in the last 10 years, right? Not that many. People are doing seed rounds. Now they tell me, companies come and they say, oh, I'm depressed. I said, what happened? Oh, my valuation is only 300 million at the seed. And I go like, I think it's like problem of riches. That's what these entrepreneurs have. So I think like it's already high. I'm concerned that everything may not stay up. So we could go from all these hyped up companies, some will keep growing, but maybe that will be 1%, 2%, 3% of the hyped companies. But a lot of them are making their lives really, really hard.
How do you and the team at Mayfield value companies? What's the strategy there?
I would say at Mayfield, since we are investing at the ideation stage, we are looking for a win-win with the entrepreneur. Clearly, from where we were investing in the cloud era or the mobile era, valuations are dramatically up. But for us, a win-win with an entrepreneur is, hey, everybody needs to make money. We respect their business model. They need to respect our business model, which is VCs need to have margin in their business. So we need to have, with small checks, enough ownership for the risk we are taking. And luckily, to succeed, there are enough entrepreneurs who believe in that philosophy that we can still survive and thrive. So that's what we are trying to do. There's no science. It's really an art. You can't be on every cap table. We can't invest in every company. Every founder may not work with us, but can we find 7 to 8 inception stage companies a year where we have meaningful positions and we can work with these entrepreneurs to help create leaders of tomorrow? There are. So we try to stay away from people who have unrealistic expectations. And why? Why get into business with people? And it's vice versa. My standard answer to people is, if they ask for something, sorry, we don't have such a product, right? Like, I love In-N-Out, but I have their veggie burger. Now people will say In-N-Out only sells one kind of burger. So what is this veggie burger? You throw the beef patty away and you have the rest of the stuff, right? So if you go to In-N-Out and say, I need a chicken burger, they don't have it. You come to Mayfield and say at seed stage, I'm raising $1 billion. Sorry, we don't serve that. So one needs to know, even as a venture capital firm, what's their North Star, what is their strategy, and stick to it. So that's what we try to do and be happy with what you're doing.
Sourcery is brought to you by Brex, the financial stack trusted by more than 30,000 companies, including 1 in 3 venture-backed startups in the US. Nearly 40% of startups fail because they run out of cash. Brex is literally built to help founders avoid that. Unlike traditional banks that let your money sit idle, chipping away at it with fees, Brex is designed to help you spend smarter and move faster. Their all-in-one solution combines checking, treasury, and FDIC protection into one powerful account. You can send and receive money globally at lightning speeds, get 20 times the standard FDIC coverage through their partner banks, and even high yield from day one. With same-day and even same-hour liquidity, access your funds anytime. Companies like Scale AI, DoorDash, ServiceTitan, Hims, Anthropic, Flexport, Robinhood, and Plaid trust and use Brex. Start today at brex.com/sorcery. That's BREX.com/sorcery.
So Carta has some data on this. AI native companies have a much faster and easier time raising capital than non-AI companies. So much so that Series A, they now raise 2.5% faster. This has increased. And then also AI companies are getting a premium. So this valuation pump is really happening and it's affecting seed to Series A, most significantly at the Series A. Companies in the first half of 2025 saw a 30.9% higher valuation and secured 33% more capital than any other companies. How do you think about that in the grand scheme of marketing?
I think it's just the reality. If you are not going to be an AI native company, like where do you go? It's like saying, I'm not a tech company. Every company in the world has to use tech. So AI to me is the great equalizer. It's democratization of intelligence. So that's what consumers want. That's what businesses want. I would say go even further in the first half. According to NVCA, 67% of all dollars went into AI companies. I think it's going to be 90% in a year. And it's going to be really hard for companies. It won't be just 33%. Companies are going to take 10x the time to raise money if they are not an AI native company. So my advice to entrepreneurs is, right, like figure out how, like the way people build on clouds, how companies were mobile first. How do you use this technology and endorse it? You don't need to be a foundational model company. That exists. You don't need to be an NVIDIA. But if your customers are looking for intelligent applications, they want to drink and have this pill, which is called intelligence on demand, you need to integrate it in your products. It's not about cost cutting. That the big companies are figuring out, how do I use AI to improve productivity? You're a startup. You're supposed to be 10x ahead of where the incumbent and legacy vendors are. So you better adopt this technology and do something with it. So I think it's only going to get worse for non-AI companies.
If everybody's an AI company, then what? Like, where's the value?
I think the value...
How do you find
the
fake companies?
There's going to be a lot of them, right? So I think to me, AI is just going to be an ingredient technology. Mm-hmm. It's going to be, I build a product. It's like saying, hey, I use electricity. But now the thing is, we consume electricity. Every company consumes electricity. What do you do with it? So now using AI as a commodity, as a utility, you have to go solve a real problem for your end users, which can be consumers or they can be businesses. So you have to figure out, what do your customers care about, and provide them painkillers, not vitamins. If you do that and you can rise above the noise, they will buy your product. And if they buy your product, either they'll pay or some advertiser for those eyeballs will pay money to you. So I think to me, that's where the world will head once this infrastructure, what I call the cognitive plumbing layers of the hardware and the models settle. Applied AI companies are going to be on the rise. So that's what I mean, that you have to just take it as a given that your product needs to have AI as an ingredient in it and then build on top of it.
So let's talk about the full stack of technology. You invest end-to-end, semiconductors to applications and software. Could you lay out all of those layers and how do they work together?
Absolutely. So first and foremost, I would say, as I mentioned earlier, this is the intelligence era. So our belief is humans and AI will work together and take us into this new era of collaborative intelligence. And in this era, AI will enable humans to get to superhumans level. And what I mean by that is, if AI can help augment me and free up time so that I can go do things which I really want to do. So they can amplify my capability. AI can amplify my capabilities, give me time to do creative things or do things I could never do. So to enable that, we believe there's a collaborative intelligence stack which is being created, which starts from the hardware layer, which is the semiconductors. The next layer up is the brain, which is the model companies. Once you have models and you have hardware, this gets packaged by a cloud service provider or by an inference company. You need to bring your own data. So the data layer becomes important. Once you have data on top of models, on top of hardware, now you need middleware and tooling to do something with this plumbing layer. Once you have that, you build intelligent applications. And then finally, the most exciting layer of this stack is what we call AI teammates, which are built on agentic technologies. And what are they? They're digital companions that work with humans to take us to superhumans level. And that market is a massive market because the spend on knowledge workers globally is 30 trillion. And AI will do 10 to 20% of the work of what humans do to offload them. That's a $3 to $6 trillion opportunity over the next 5 to 7 years. And that's what we are seeing with vibe coding agents, with AI-enabled customer support reps that, hey, AI will be your digital companion. So this market is just expanding. The same way Airbnb, Uber, Lyft, DoorDash expanded markets, that's what AI is doing at this AI teammates layer, and there are opportunities up and down the stack in this era.
And that's where you think the most value will accrue?
I think right now the value is at the infrastructure layers. So the hardware companies and systems companies are the most valuable. So if you look at NVIDIA, $4.5 trillion, then you have a company which most people don't know about called Broadcom, which makes all the networking chip and other chips along with AMD. It's a $1.6 trillion company. Then you look at systems companies, Apple, hardware company. You look at cloud providers, Google, Microsoft, AWS, they're all $2, $3, $4 trillion companies. And then there is Meta, which is a consumer company. But most of the value right now is in hardware and systems companies or cloud providers. Next layer up, models is where the value is accreting. You have a $500 billion company in OpenAI. You have a $170 billion company in Anthropic, and many $10 billion companies. So that's where the value today is. But looking forward, the value will move up. It always happens. The roads are built first, the infrastructure, the plumbing layers, but then cars come. That's what these teammates and intelligent apps will be. So today, for the next 5 years, that's where the spend will be. People are just building roads. Once the roads are built, you have to do something with it. So that's where these AI teammates and intelligent app companies are going to get created. And that's how you're going to consume all this infrastructure which is getting built, right? So the equivalent of ChatGPT or the equivalent of Cursor is going to be created for every consumer intent and every business user. So we're just at the start of that. Just at the start. But today, value for the next 3-4 years is at the infrastructure layer. If I take 10 years out, this will be built, value will go up the stack.
How are business models different in this era versus the SaaS era?
So I would say at the applications and at the teammates layer, SaaS took us from the era of perpetual license, which was enterprise software, to subscription, where you charge per user per month. Now we are moving into an era of consumption-based pricing or outcome-based pricing. I don't pay you per month. I pay you for what I use. And that's where this era is going, where I don't charge per user per month. I charge for the activity I do for you. I charge for the task I complete for you. So that's where the business model is changing. And that's a very important component of these AI native companies. They have to move from subscription to consumption-based pricing models.
In today's high-speed business world, staying ahead means using the smartest tools possible, including the powerful capabilities of artificial intelligence. Meet Turing Intelligence. Turing builds customizable AI systems designed to solve your mission-critical challenges no matter your industry. From expert guidance to tailored projects, Turing helps top companies realize AI that's more capable, more adaptable, and more effective. With Turing, discover how AI can accelerate your business growth. To learn more, visit turing.com/sorcery, spelt SOURCERY. That's turing.com/sorcery.
The race to 100 million. I was going to say billion because we're just throwing out big numbers left and right. It could be a trillion.
It could be a trillion
But the race to 100 million in revenue has become a new benchmark. Somehow, some way, it's how fast can we get to 100 million in revenue? I think one thing that could be interesting to break this down is the different types of companies that are reaching the 100 million in revenue because they're very specific.
Yes.
Could you explain the different types of companies that are doing that? It's like AI research labs, but then it's also Lovable. So like, what is
Correct.
the difference there?
So I think there are actually, let's decipher it based on the stack. So there are companies in the hardware layer which are going 0 to billion, not even 100. And I have a few in my portfolio.
Okay.
Which hasn't even announced they exist. So I have a company which is in the optical interconnect space. If you have GPUs, you need to connect them, not on copper, but on optics. This company remains in stealth. It's 14 months old, from 0 to $3 billion, because the spend is massive, right? And they only have a small portion of the market. Their competitors in China, just the top two players one is worth 70 billion, the other is worth 50 billion. And when they get this contract, maybe they have 10% of the order, 5% of the order. So hardware companies, what we are seeing with NVIDIA, if you hit a jackpot, don't compete with NVIDIA, but everything around it, power, cooling, networking, you can ramp even faster because the orders are big. The hyperscaler are your customers. The second area is the AI research labs, which have also scaled, not to 100 billions of dollars in revenue. I think the third area where the revenue ramp is happening is coding agents, which is Cursor and Lovable. I can tell you everything else is slow, which is to get to 0 to 100, it ain't happening in 1 year. So it's hardware, models, and these coding ones are the killer apps. The rest of the stuff goes, and these are like, I don't know what the word for these are. Like, these are like imaginary creatures. They never existed. They're not unicorns. You and I have to come up today with a new name. I don't know what it is, but we'll figure it out. Or we'll figure it out in the comments, right? Like, but the remaining companies are, I would say, going from 1 to 10. In the past, SaaS companies, if you did 1 to 3 million, you used to feel good. That's it. Now people say that's it. So I think team-made companies and application companies will go like 1 to 10, not 1 to 100. But there could be categories, the equivalent of Cursor and Lovable, which have a product-led growth strategy, more a bottoms-up strategy. Maybe it will happen in IT ops. Maybe it's happening in legal, where it's like ChatGPT or Lovable, individuals can use it. The moment you go top down and there is a human involved on the other side who has to write the check, you know what happens, right? Like basically it's slow. So that's why it's not that the market isn't there. The bottleneck will be humans. When you go to an enterprise company and say, buy my product, the security person raises their hand. This is wrong with this thing. Governance people wake up. Privacy people wake up. Then procurement people wake up. So there you can't ramp. So it's these bottom-up companies at the app layer which can ramp. So could there be more? Could there be a team made for accountants, where accountants individually buy, a team made for tax preparers, a team made for salespeople? So if you can have a bottoms-up motion, then you can go 1 to 100. But if you have to go sell to a buyer, there's friction, there's paperwork, you have to sign documents. Even though they're in the cloud, DocuSign, but still humans are signing. So the companies won't go 0 to 100 in the first year. If they go 1 to 10, they're doing pretty well. If you only go 1 to 3, maybe you're like median, average. 1 to 3 used to be, right, in the metrics, you're a great company, 1, 3, 10. I think now it's 1, 10, 50. For even the normal companies, the equivalent of SaaS, that's expected of you. But if you hit a category like Lovable or like Cursor, 1 to 100 is expected of you. And if you're a hardware company, you have to think in 2-3 years in billions. And I think probably most of the people haven't figured that out. That's what is happening in hardware companies. They're ramping even faster than lovables and cursors.
Sourcery is proudly sponsored by Carta. Carta is transforming the private marketplace, connecting founders, investors, and limited partners through software purpose-built for private capital. Trusted by more than 65,000 companies in over 160 countries. Carta's platform of software and services lays the groundwork so you can build, invest, and scale with confidence. Carta's fund administration platform supports over 9,000 funds and SPVs, representing nearly $185 billion in assets under management, with tools designed to enhance the strategic impact of fund CFOs. For more information, visit carta.com/sourcery. That's carta.com/SOURCERY.
So Hemant just went viral on X with his interview with Harry Stebbings of 20VC because he thinks that the triple double is over and we now have an entirely new pace, similar to the numbers that you're speaking about. It's become a much faster pace, a higher velocity of companies. But this post, like this clip went viral because a lot of people didn't like to hear that. They really there was a lot of backlash against it. And they're like, no, I've been running my business for like 10 years and I've gotten to X amount of revenue. That doesn't mean you're a failure.
You're not a failure at all. Yeah, it's just different. It depends upon what problem you're solving. And that's my point with AI. If you get product market fit, this is, by the way, the metrics I'm giving you are for top decile companies.
Yeah.
They're not for everybody. Like if you can build a durable, sustainable business, it's an amazing thing. But if you are an AI native company and if you hit product market fit, that's the kind of growth you're getting. That's the kind of growth you're getting.
How do you decipher real revenue versus experimental or vibe revenue, as some people are calling it?
Yeah, I would say this is where one needs to go deeper than the 30-second elevator pitches. So what I would say is real revenue to me means it's real customers, not startups selling to other startups, and startups of an incubator selling to startups of that incubator, right? So your customers have to be around. Second, these contracts need to be real and recurring in nature. They can't be like, hey, conditional, I'll give you $20 million. Okay, but when? When, right? So I would say that's where, in my mind, real revenue and durability matters. And there's one more point, even though I mentioned earlier, we are entering or we are in the era of like vibe era or vibe economy. There is a problem with vibe revenue that your gross margins are very low. Yeah. So to build SaaS companies have 70, 80, 90% gross margin. But a lot of these coding companies, they have either negative margins, which has been reported, or 15, 20% gross margin. That's a problem. So to me, when I say you have to have durable revenue, it has to be from real customers who are going to be around. Second, it needs to have high margin. And third, it has to be repeatable and not conditional on 50 things. And I prefer the real revenue companies, even if they have slower growth, than these vibe companies, which will never make money. And that's where I think it's a healthy balance. But if you're claiming you're an AI native company, you're an AI first company, then the market is allowing you to have that kind of growth. But this 100 million is a fiction, right? But I think 1, 10, 50 is doable in this new era. Very different than what the market opportunity was for entrepreneurs who started a decade back. It's just different timing.
For those that don't know much about these coding companies, could you explain why they're negative margins?
Yeah. I think they are built on top of the AI model companies, and the cost of inference today is very, very high. So whatever I charge, I'm charging as a coding company a certain amount of price so that I can expand the market, so that it's affordable. there is a difference in SaaS companies. The more AI companies succeed, the more they get used. And your meter is on from the AI model companies. So if you create a great company, actually your best customers you lose money on. So my advice to them is come up with variable pricing. Don't say in $20 you can code everything or in $50 you can code everything. That's where what I mentioned earlier, consumption-based pricing, outcome-based pricing is happening. So it's happening because of two things. You don't have your own model. You're dependent upon somebody else's model. They're charging you per tokens used. Costs are not at the point where inferencing is cheap. It will be. But then your most successful customers are the ones making you unprofitable because they are on a fixed fee plan and they're consuming 100x the resources of what they should be consuming. So that's what is happening, why the margins are low.
It's crazy. We talked about revenue metrics, but I'm curious. One of our sponsors is, I was going to say Sourcery, but one of our sponsors is Brex. And Brex is all about spending smarter, moving faster, performance. They're a performance-driven modern finance stack. I'm curious from your standpoint, apart from these revenue metrics, what are the other metrics that you use to measure companies' success when you invest in them at the inception and then also follow on?
So I think at the inception stage, the most important point is you have to identify a customer segment, what is called the ICP. You have to find the right persona within that customer segment and make sure your product is a painkiller, not a vitamin. And initially, the revenues won't matter that much. What matters is, do your customers love you? Are you a daily habit? Are you an hourly habit? Are you a minutely habit? Or whatever the right word is. How often are people using you, right? They have to be in love with your product. So that's what we look for when we give somebody a seed financing is, can they do these things? If they can establish an ICP where they have product market fit and signs that they're creating value for their customers, that's when they reach Series A. And then the meter turns on, whether you're 1, 3, 10, whether you're 1, 10, 50. It's not for every company. It depends on which market you're going after. You can't grow faster than the market needs you. So I don't think we can come up with a rule. Every company needs to be 1, 10, 100. How? If the end customers are not moving at that pace, that's why the MIT report says 95% of these AI experiments don't work. The customers are not ready. Right? So I would say the other metrics besides, so I would look at, these are not even revenue metrics. Then the other thing you try to look at is, do they have a long-term viable economic model? When the internet happened, e-commerce was taking off. You sell a thing for $1. It used to cost you $3. Of course, everybody will buy. So you can't do that you're selling something at $1 and to serve it, it costs you $5. Can't happen. So durable business models are very, very important. And then once you get into the revenue stage, repeatability becomes very, very important. And then once you start growing into follow-on round, all the SaaS metrics of magic numbers, all the KPIs will get modified and there'll be new laws which will be put out. Some by VCs, some by the industry pundits. That hasn't happened because these spaces are only like a year, 18 months old. That's coming. We are also thinking about it. Everybody is.
Can't wait for the next VC report on telling us what the metrics are.
Yeah. There'll not be one. There'll be 10s, 20s, 30s of them.
Yeah. I want to go back to one of your initial things that you look for, and that's investing in people.
Yep.
So what are the key traits that you look for in founders?
It's like going to Coca-Cola and saying, how do you make Coke? So that when Pepsi listens to it, they say, now I know. No, jokes apart, right? Like, I think first and foremost, we're looking for authentic people. We don't want to work with people who are like faking it. Second thing, I would say, is company building is a team sport. So we look for people. How many times do they use the word we versus I? So if they use the word too much of an I, then they're an individual player. Then they should go play tennis. They shouldn't play football. Unfortunately, company building, 99% of the time, will be a team sport, like American football, like basketball. But there is a lot of memes also on Twitter, X, that when will be the single company which will be $1 billion company? And again, that will be rare, right? So start with people who are authentic. They're team players. They need to be very mission oriented. They can't be in it for a quick buck. They need to have high level of emotional intelligence. They need to be very secure in their skin, because insecurity will make you do things that are just not good. That are just not good. And they're always willing to put others, company first, team second, themselves third, which very few people do. Those are the people who create loyalty. They are the people who create movements and end up creating these iconic companies. And then finally, right, like they have the hunger to go through any wall, including Mayfield's office, including my home. They just don't take no for an answer. They'll just drive through, because that's what entrepreneurship is. It's about persistence and perseverance. They'll just go through any wall. So that's what you have to spot, right? Like, are these people like that? Because all odds when you're an entrepreneur are against you. Everything is against you. Because at the stage we invest, it's a paper and pencil idea. Everything is against you. So they have to be crazy, but authentic and very values oriented. And putting this people gene is very important.
Who's an entrepreneur that you admire?
Many of them. And it'll be unfair to say, right, like one versus the other. But I can give a few examples, right? Like John Zimmer of Lyft, amazing person. Lyft ended up creating a community where they essentially pioneered ride sharing, where normal humans drove other humans and created a fun community. Another one is Manish from Poshmark, where basically their aim was, it's all about love. And they created a community of women selling to other women fashion. And they created many, many jobs. Another one was Mitch and Armand from HashiCorp, which had a Tao of HashiCorp. Again, their values, on which they built a company and always put people ahead of themselves. They never wanted to be a VP of Eng, never wanted to be a CEO. Said, we're going to build a company. We're first-time founders, never worked anywhere. Help us. Help us. So they knew their weaknesses and were secure in their skin. So that's what I've seen with some of these people. But everybody I've worked with, I just love working with them and enjoy working with them. Everybody is different. So it's unfair to only give those three. But hey, they were the unicorns, decacons, so they came to mind. They came to mind.
So one of the themes that we've covered throughout many of the questions and your answers is what happens when we get super intelligence. There's lots of opportunity. But what does that actually mean for people at their jobs? And when do you think we're going to get AGI?
Yeah, I think AGI to me is like far away. But far doesn't mean 15, 20 years, but it's not 1-2 years. I would say already we are seeing with machines, they can do certain tasks at the same level as humans or even better than that. But humans, I believe, are not dinosaurs. Technologies come and go, they adapt themselves. And that's what is going to happen here. AI is going to be a tool where humans are the jockeys. They'll use this horse to adapt themselves, to endorse this, adopt it, and do things that they should be doing. And this is the same level, right? Like when you're an exec in a company, you have a team. you don't do everything. Similarly, if you're an employee, you don't write by hand, you just type. Now you'll be able to verbally see it. So what does this do? First, intelligence is going to get democratized. Knowledge is going to get democratized. Expertise is going to get democratized. So why should only a technologist or an engineer be able to start a company? So I think the number of creators or number of entrepreneurs is going up by 10 to 20x. It's going up by 10 to 20x because now using vibe coding, using AI as a tool, you'll be able to create something. You don't even need to know marketing. AI can do it for you. So to me, knowledge, expertise is going to get democratized and humans will do things that we only dreamt about. Using AI as a tool, using AI as a horse. And I think sky is the limit. Sky is the limit. So my advice to every human, including myself, is consume this thing before it consumes you. Right? So we'll be doing new things that we were never doing before. And these machines and us will be teammates and they'll do certain things better than us. We'll do certain things better than them. At the end, we control what we use it for. So that's why it's a technology, right? And like any other technology wave that has happened, there was always fear. Cloud happened, PC happened, the people who were typewriters sitting in law firms, they'll go away. Actually, it expanded. Number of CPAs expanded. Number of doctors expanded. Now, instead of 30 million developers, we'll have 1 billion developers. So that's what normal people will be able to do things. For example, I used to write a blog every 6 to 8 weeks. Now I'm writing weekly. It's amazing. Similarly, no product ever gets finished. And every time the PM and the engineers are fighting how many features can get in. But now using AI, you'll be doing more. So Apple, for example, changed the consumer electronics industry where new products come out every year. With AI, maybe they'll be coming out every 6 months. Maybe they'll be coming out every 3 months. That's what is going to happen. Innovation is going to get democratized. And humans are smart. They will figure out. And it's hard as a VC to know what exactly people will do because then if it was so easy, why do entrepreneurs exist? We don't know what the world will look like, but it'll be different where humans are going to do things that we haven't been able to do before. And it will be an era of democratization of knowledge, expertise, and intelligence. But many, many, many people where there's shortage of doctors, lawyers, nurses will be able to do those things with AI assisting them. AI will be an assistant.
Very optimistic.
Always have to be. Otherwise, I'm in the wrong business.
That's true. Optimistic and expansive. It's good. What are you most looking forward to in the next 12 months?
Just working with great entrepreneurs from whom I can learn and who are going to go create companies which are going to change the way humans work, live, and play.
Amazing.
That's what you have to dream for every day when you wake up, that entrepreneurs and humans will make the world a better place and change the way we work, live, and play.
Navin, it was a pleasure to have you on. Thank you so much.
No, it was great. I really had fun. Thank you.
Hey, it's Molly. If you enjoy our interviews, check out our newsletter, Sourcery.vc, where we deliver a once-a-week top deals and tech headlines email, and also go deeper on our podcast interviews. Subscribe to Sourcery today. And don't forget to subscribe to the podcast on YouTube, Spotify, Apple, or wherever you listen. Link in description to sign up.